Morning, everybody. It's 8:36 on Thursday, and because it's Thursday, it's claims day. Um, Claims, which last week were just over 200,000 new claims, fell back just a little to 192, so down a little. Um, Continuing claims fell from over 1.7 to under 1.7, 1.684. So nothing overwhelming there. Housing starts were 1,450,000, which is a dramatic improvement from the 1,000,003 we saw last month. With the turmoil in the mortgage market, though, I'm going to guess next month is probably going to be more important. Permits were 1,524,000, and that was dramatically ahead of 1,340,000. Import prices down 0.1%, expectations down 0.2. So that's neither here nor there. But X energy, uh, it was down 0.4 versus expectations of down 1.4. Exports up 0.2 year over year, down 0.8. Philly Fed mirrored the Empire Index yesterday, which was down 2460, I think. Philly Fed was down 23.2, and that comes on the heels of last month's over 24. As far as stocks go, at 7:15, they were down 175 in the Dow, then down 104 at 8 o'clock. At 8:29, they were down 43. Now they're back to down 89. NASDAQ was up 10 to up 35 to up 40, now up just 11. And the S&P was down 15 to down 7 to up 32 cents, currently down $7. Talk about TikTok and the recipients should it get either banned or bought. Obviously, Meta, Snap, Pinterest. Uh, First Republic Corp down hard again this morning. Uh, this is the bank that did basically the same thing that SIVB did. On the day right now, we are 2181, and that is down $9.35 or 30%. You need to be warned. If you trade this one, you may get stuck in the trade, as people found out with SIVB. You can own options, you can buy the puts, you can short the stock. The problem is if they stop trading in it, your options will become worthless and your shorts will not be coverable if there's no market for the stock. So that's important. I'm looking for a bit of a bounce today here. The AAII numbers were Bulls 19.2, down 5.6. The Bears were 48.4, up 6.7, and the I don't have a clue group, the neutrals, was down 1 at 32.4. These are very low numbers for the Bulls and high numbers for the Bears. We have seen lower and higher, respectively. All right, everyone. This is the dollar. And as you can see, we again held this 103 line. Yesterday we were up $1.06, I believe. 1061. Today we're down 20 cents. So nothing overwhelming there. I want to take a look at the bonds because they are getting critical vis-a-vis breaking back to the upside. Remember, this is the chart with all of the arrows. Let's go to the weekly and expand that out so you can see what I'm talking about. 7 consecutive lower highs, lower lows. We are in danger of breaking that back up. I don't know if it's going to be meaningful, but I will say this was a low. This is a higher low. And we also have on the weekly a cross, or about to have a cross on the 5 above the 20. We were only, we've run out of gas. It did it here and stopped, then topped again. Now it did it here, and we'll have to see. Um, I could tolerate up to this 135 area without making a call on it, and we are sitting exactly on the 50-week MA. On the daily, let's bring this in a little. On the daily, if we don't break down out of here, it looks like we're going to that 135, 136 area. And that would be a problem. Anything above this 132.31, and we're 132.13 right now, any close above that would probably turn this. All right, everyone, have a good day. I'm kind of keying off the Monday low in the S&P and the Nasdaq as a place um, to possibly see a lot of stops, but also a lot of support. As long as we're talking about it, let's go and look at it. We'll see what we are talking about exactly. Okay. Monday's low, 38.39 and a quarter. Currently 39.25. That's a long distance, but I would think that if we got down to 38.80, which is pretty hard. I mean, that's 45 S&P points. Um, or we get above this, a lot of congestion up to 4,000, a lot of support down to 38.50. All right, folks, I'll be back later.